And the
Yeah.
truth is that we are therefore in for a world of hurt because we're entering into a world that we cannot control. And the United States Fed doesn't give a damn about Canada and New Zealand and Australia.
How bad is the situation for assignments?
You know, it's for the past 10 years, everyone and their uncle has made a whole lot of money in assignments. The reason they've done that is for several reasons. First, there was the idea that the CRA was permitting assignments to be taxed as capital gains. I mean, there were some exceptions to that, but for the main, most people who assigned with a capital gain. What did that mean? That meant that if you made $100,000 in profit, and P.S., most people were making far more than $100,000.
Right.
It meant that if you were making more $100,000 in profit, you would take 50% of that, $50,000, include that in your income. So if you say are in the top tax bracket and paying about 50% tax, you're taking $25,000, giving it to the government and making $75,000. Last year, the government changed the rules, and now everything is deemed to be income tax plus there's HST on things. So what does that mean? That means that if you make $100,000 in profit, the same $100,000, you're now taking that $100,000, putting it into your income, and paying at the top tax bracket $54,000. It's 54% in Ontario if you make over $229,000. And you have to pay HST of 13%, meaning that the tax rate that you're paying the government on an assignment is now 67%. I mean, that's an astounding amount. And it leaves you with $33,000 for profit. So the whole assignment for profit is largely dead. The government killed it. They did so intentionally. And so that is at an end. Now, that doesn't mean that people aren't still trying to assign. There's still profit in it and people are going ahead. But now what we're seeing is, of course, the fact that the assignment market is becoming illiquid. And it's not becoming illiquid because of government policy. It's becoming illiquid because of interest rates. There is a tipping point that takes place where supply first supply exceeds demand, and that's the market we've been in for so long, which has caused the rise in prices. But if supply largely equals demand, okay, no problem. You can assign. You just assign for whatever price. There you go.
Yeah.
When demand exceeds supply, and more importantly, when the perception is that that will continue for a long period of time, prices decline. And prices declining is a feature.
You mean supply increases?
When supply exceeds demand.
Yeah. Okay.
Sorry, if I said it the opposite way originally, I apologize. So
no.
Where demand exceeds supply, prices go up, everyone's good. And even if it's roughly equal, the assignment market remains healthy and did remain healthy. But now we're entering into a point in the market where supply exceeds demand. And the problem with that is that the perception that supply will exceed demand for a while is now seeping into the public consciousness. And what that means practically, unfortunately, is that there is a perception that the properties that we are now buying will be worth less tomorrow than they're worth today. Not long-term, not in 10, 15 years.
Right.
But in 1 year, 2 years, 5 years. And what that means is that there's no disadvantage, whereas there was disadvantage for waiting on the sidelines in the FOMO years when everything was going up.
Yeah.
The very polar opposite is true. There's advantage in waiting by the sidelines. And this really negates the whole immigrant strategy and discussion points that every realtor has been talking about out the wazoo for many years. They're all, we have 1 million immigrants. We have 1 million immigrants. We're going to be doing fine.
Yeah.
But the truth is immigrants are exactly like us, aren't they?
Exactly. Yeah.
If they believe that the market is going to be worth 20% less next year, or it's going to be declining, then 1 million immigrants, 100,000 immigrants, or 10 immigrants, all of them will sit on the side, waiting it out because there's no disadvantage to doing so. And so when you hit a certain tipping point in the market where the perception suddenly hits that we're in for a downward cycle, everyone stays away. And where they're staying away from above all else is assignments presently, which means that the market is becoming very illiquid, meaning you cannot offload your assignments. Interestingly, the assignment market has, over the course of a year, gone through a cycle that I've been born witness to. At first, people were ready to just take less profit on their assignments. Then they were able to walk away from their assignments with their deposits and their realtors paid. Then they said, I just want to walk away with my deposits, I'll pay my realtors.
Right.
Now, particularly in less urban areas and particularly low-rise product, we are seeing people walk away having lost all of their deposits.
Really?
Now, that's pretty much their extent of their loss, because if someone is going to lose more than that, then they have to put money into a deal when they sign it, and very few people are willing to do it. So there kind of is a floor to the assignments, but the floor to the assignments is really about 20%, because that's usually what people's sunk costs are in the form of deposits. And we are seeing a lot of people start hitting that nadir, certainly more and more with every passing day. We're entering into a new reality, and hardship, and the fact that we've been in higher sustained interest rates for now over a year is starting to take its toll.
What are the legal implications? Like you can't close.
Right. Well, the worst that happens is that you lose your deposit, and then the builder is technically, like anyone else who suffers breach, is permitted to then sue you for the delta, meaning that if you purchase a property for $1 million and you put down a $200,000 in deposit, and the builder resells for $700,000, the builder already has your 200 and is allowed to sue you for a further 100.
Right. Okay.
It's not good. Now, generally, where the builder is seizing significant deposits, the likelihood of them selling below that price is minimal. But where builders are, where something is not appraising properly or is significantly off value, and the builder is going to take a serious loss when they sue, well, those parties have exposure, and we're starting to see those lawsuits start coming in the door, certainly in my firm.
Yeah, that's what I was going to ask you, because this is one thing a lot of people are not talking about. Like, how many deals are you seeing come in that are not closing, or they're just looking for ways out? Like, how many are you seeing?
Well, I mean, how many I'm seeing isn't impressive if you don't know what my absolute numbers are that I do in my firm, right? Because one can be very impressive if I have one deal. If I say one deal a day and all I do is one deal a day, then it's 100%.
Yeah.
Right? So the absolute number is hard to quantify, or the percentage number is hard to quantify. But I'll tell you that over the past 3 weeks, I've dealt with at least one breach file a day in my office. And that isn't necessarily someone who's breaching that very day. It could be someone who says, hey, in a couple of months, I have a closing and I just can't do this. But breach talk is de rigueur in my office. That's pretty much what I do now almost every single day. It's getting shockingly bad out there in the new build world, not in the resale world. Because if you think about it, buyers of resale property already knew that interest rates were high. There's generally a 3-month interval between when you sign up for a resale agreement and when you close it. And so if you're signing a resale agreement, you already know what the interest rates are. You've already kind of made your peace with all this. And so there's no issue.
Right.
Where there's an issue is where you signed an agreement 5 years ago, believing that the interest rates would be 2% and that your HELOCs would be available. And now suddenly none of that is true. And more importantly, you don't have any ability to assign away the other 3 units that you purchased. And it's just, in Yiddish, we call it a cluster bomb. That's what I'm going to say.
Okay.
Make sense?
Yeah. Well, because the reason I was asking was, I'm still hearing the same sort of ads on the radio, even on social media, like the rates can't go up forever. So you got to get in quick because the builders are giving all these incentives. So you buy now, but by the time you close, the interest rates drop. So you win. Like, so
it's funny.
What's your opinion on that? Like,
I've never been part of very loved professions. Early in my career, I was in politics. I'm also a realtor by profession, and I'm a lawyer. And truthfully, every single one of those professions is kind of routinely hated by the public for so many reasons. But the reason that realtors are somewhat hated by the public is because people don't believe that their interests align with the interests of the buyers. And to some degree, in this instance, they're right. Like in this instance, if you're selling new build, you're making a commission of 4% on the deal.
Yeah.
And it's these people who are holding the bag and having to close in many, many years.
Right.
It's a very unfair position. It's one that is, I'm not saying every agent doesn't act in their client's best interest. Many, many do.
Yeah.
But the financial incentive to not act in your client's best interest is there. It's there. And if you can get someone who says, yes, I'm ready to do this, even if you believe they shouldn't be doing it, you're incentivized to the tune of $20, $30, $40,000 to tell them to do it. Well, many people might take that game and that gambit. And so it's not hard to understand why those people, particularly those people who have less care for their client than perhaps they should, are engaging in stunts. Now, many people may genuinely believe it. I'm not trying to cast aspersions here. There may be many people who believe that they have deals of a lifetime or that the market's going up or anything else. But I'm sure there's also a portion of people who do not and are acting cynically. And that's true of every profession, but it's also true of realtors.
Yeah. Yeah. But like, shouldn't they have some sort of responsibility, like the agents? Because, like, what if they just say, okay, this could happen, this is the best case scenario, or it could go south, it could go this way, and then the client can make up their own mind. But I find
Sure.
that whatever you've told me so far, I've never heard that on social media anywhere. So
Yeah.
if they just said that, like just what you've been talking about, that's a lot of information, good information for the client, right? Like,
Yeah, no, it absolutely is. And the truth is that you kind of wish that everyone did hear this, but that's not the case. And again, it's not to cast dispersions. Again,
no, not everyone's like
it
that.
could
No.
be it could very well be that a realtor genuinely does believe that their client's best interest is in buying a new construction. I'm not trying to say it isn't, but you have to also, if you want to be a professional and looking after your client's best interest, then you have to educate yourself and you have to understand how cycles work. In
Right.
real estate cycles, we've been on a bull run cycle for real estate that has lasted 20 years. Very few of us have actually seen downturn. But
Right.
downturn does happen. Ask anyone who's been around in 1989. And downturn seemingly is around the corner, particularly with the irrational exuberance that took place over the past 5 years. If nothing else, because I may be wrong about that prediction, it's certainly something that we need to have our back up against and we need to be guarded against, in the knowledge that perhaps we are entering into a cyclical cycle that will bring down quite a few people with its vortex.
Since you're talking about the bull run, like, what happened in the springtime? It wasn't really logical, right? Like the banks paused the rate and everybody just thought it was the bottom of the market, and a lot of people jumped back in. Now nothing's changed again. Do you expect something like that again in the next spring, like for no reason except that they're going to pause the rate, or if they do at all?
Well, it was illogical, but it was illogical in the most human of manners. Because the truth is, a young baby touches a stove once and then doesn't touch it again. Once you get burned, you learn.
Right.
When the rates went down, the rates were not high enough for long enough that people had touched the stove. And as a result, the only experience that anyone has had is in being able to steal from the stove, not actually getting burned by it. Right?
Right.
And so it's turned totally logical that someone who for 20 years has played a game and keeps winning money would think, okay, I just need to push through on this. That makes logical sense. It's not factual. I don't think it's going to be the factual case, but logical it certainly is. So if you're wondering what happened in the spring, what happened in the spring is people had held their breath underwater for a period of a year, and they said, okay, we're coming to the end, and we made it through. But that wasn't the pain. The pain has started now. And as a result, we have finally touched the stove. And it's only after you touch the stove and after you recoil from the pain and after you deal with the pain and after the pain resides and the psychological torment is still there, that's when we have our reflexive memories and institutionalized memories. The people who touched the stove were last alive in 1989, and not alive, but actually actively practicing. And how many people do you know who are alive today who experienced that, who experienced the O&Y debacle?
Right.
In the United States, they had 2008, but we didn't. We didn't in Canada.
No.
So what you're talking about is you're talking about something that's logical, but not necessarily rational, given the forces that are now stacking up against the market. And I do hope sincerely that upon touching the stove, we all collectively don't keep our hand down for 5-10 seconds before we realize what's going on, but we immediately remove it and kind of recover quickly. It's anyone's guess as to whether or not we do.
In the next couple of years, like how bad are we looking? Because a lot of
We're
renewals
looking
coming up and
pretty.
stuff.
We're looking pretty bad.
Really, because that's that's what I want people to hear, because not many people talk about that. So this is the source. Like he gets all the files. You're on. You're probably one
That's
of the
not
best
why
people.
I'm saying that's not why I'm saying we're looking pretty bad. We're looking pretty bad because the economy in the States is on fire, and inflation is on the rise, and the United States Fed is responding to inflation and tamping it down through higher interest rates.
Yeah.
And the United States Fed doesn't give a damn about Canada and New Zealand and Australia and Britain and all the places where the property bubble arose in the low interest periods, because it did not this time, unlike 2008, arise in the United States. It arose in peripheral countries. And believe me when I say the Fed doesn't give a waking damn about Canada.
Right.
And as a result, it's going to continue to raise rates to fight inflation in the knowledge that it won't affect their economy drastically. But Canada, who follows the United States in its dollarization, then has a stark choice. Does it chase the interest rate up, or does it allow its dollar to plummet? And the truth is, neither of those are good options. We are therefore in for a world of hurt, because we're entering into a world that we cannot control and that does not care about the massive overexposure that we've all engaged in for the past 10 years. So basically what I'm saying is we're about to reap what we sowed, or at least it appears that way. I mean, anyone who tells you definitively they know is wrong, but that's my sense. And as a result, I would be very wary, and I'd be getting into a defensive crouch, which financially means get into a cash position, ride this out, and take advantage of the opportunities that will avail themselves, and they will be plentiful over the next 2-3 years, in my opinion.
So your advice to people, like, especially like I see all these assignment sales come up, like your advice to somebody who's thinking of buying an assignment, just
no, you can buy an assignment, but just make sure that you are paying market price. Let's be clear, market price for an assignment is now 2018 pricing.
Wow. Okay.
I'm not saying don't do this. I'm saying you don't make sure that you're not catching a falling knife. Make sure that knife is on the ground and you're picking it up.
Yeah. This one doesn't make sense to me, considering what else is going on in the market. You guys probably have seen it too. The Pickering condo project sold in like 1 week and like 95% sold. Like, what's going on there?
I don't get it. I don't understand it. I think, it's 1,100 a square, which is 10% off the pricing of previous years, of peak years. They have an excellent marketing team. Everyone is commenting about it. I have about 15 of these deals in my office. Truthfully, I think that this is very similar to the hot stove. I think they're preying on the fact that many people have not yet been burnt. And they see this opportunity and they say, screw the initial turbulence. This will be ready in 5 years. And at that time, interest rates will be low and I'm in.
Yeah,
I think
that's a standard sales pitch.
Right. From an investment perspective, I think that you can do better with cash on hand in the next couple of years. I'm not saying to you PTC is a bad project. And I'm not saying to you that all that they're saying about Pickering is not correct. I'm saying that dollars are finite. You only have $10 in your wallet. You can spend it on one thing. The amount of deals that are about to reveal themselves in the market are replete. And I don't understand why it is in such an environment you would be going into a traditional condo paying $1,100 a square. Personally, I would be getting into a cash position and riding this wave. That's not what I would be doing. But again, other people have different reasons. And still others want to live in that. It's a highly urbanized environment right next to Pickering Town Center on the GO station. There's a whole bunch of reasons that someone may genuinely want to live there. Like there's other reasons, but I don't get it.
Yeah, no, that's the thing. Like when all this stuff was going on in the rush, there were a lot of people who just needed to buy because, family situations. But there were a lot of speculators. And I think that's what's kind of making people angry, because a lot of the speculators just drove the prices so high, the average guy had no chance.
Yeah,
So
that's true. But
any
the speculators were not institutional Goldman Sachs investors.
no,
They were people like you and I who, based on Canada's economy, have no option to invest in anything other than stocks or real estate, because that's the only thing that avails itself. There's only one thing that you can borrow at government rates at in Canada, and the government and banks will trip over themselves to lend at government rates for you. Only one, and that's real estate. So you can complain all you want about the person who went ahead and bought 3 or 4 units. Everyone does. They're easy pickings. But the truth is, what the hell else are they supposed to do? I mean, what the hell else are they supposed to do? We have set up an economy predicated upon investment in real estate, and we give preferential government rates to investment in real estate only. Only. Go try to open up a restaurant and try to get 2% financing. Good luck to you. Try to open up a tech business and try to get financing. Good luck to you. But go ahead and purchase a condo in the sky that's 300 square feet and that can't accommodate your gerbil. Banks will fall over one another to lend you at 2% over the past couple of years. So you're telling me that people, and meanwhile, there's these projects called new construction where you can buy futures contracts and not even put that money down, and you have an obligation to provide for your children, and you're trying to find investment strategies that make sense in a 2% environment where GICs are paying nothing. Well, I actually don't look. They're going to reap what they sow. They're in for a world of hurt. I'm not in any way suggesting that we have government bailouts or anything. No, there's a risk. They took it. They're going to lose. But it doesn't mean you should be dispassionate to the actual decisions that they had to make, given the Canadian investment environment, which, by the way, is something that governments should be working on, and we fail miserably at when compared to our southern brethren.
I feel a lot more passion, compassion towards the people who couldn't even enter the market. But
me too, totally.
Yeah,
And in fact, actually, sorry, on that point, that's the good part of the cycle. The truth is, we've created a totally unequal economy that deprives our youth of a future, where people are graduating from school with $200,000 in debt and then expected to buy $1.5 million homes and then raise kids, and no one has a chance. And this affects landholders as much as it does non-landholders, because we all have kids, and those kids need to start off. And unless you have massive millions in the bank, everyone is going through this, and we are depriving our children of a future. That's what we've done collectively to ourselves through real estate appreciation over the past 20 years. And as a result, even though I have compassion for those people who invested in the only thing that was available, I have hope for the future, and I'm happy to see this reversal, because really the people who need the most assistance and the people who have received the least of it for the past 20 years are the youth of Canada, who no longer have a viable option to a future. And if this can take a dent and start reversing the needle and give them that, well, then there's an upside to all this pain.
What do you say to people who are still bullish about the market? Like, I still see ads running, and how are they bullish? They keep saying there are 1 million immigrants coming in. Any thoughts on that? I know you said
I'm bullish long term on the Canadian market.
Yeah, long term.
Long term.
Yeah.
Look, what do I say? I say they may be right, because again, anyone who says they know what's going to happen is lying to you. And you should stop listening to people who speak with certainty. They may be right, but a judicious analysis of where we are in our debt levels versus income would suggest not. The best we can do is use our heads in this world and be honest and forthright with our client base. And if we do that, then hopefully you come to reasoned decisions. I see no reason to suspect that normalcy is the way forward for the next 3 years. And so when someone says that, challenging them and saying, well, yeah, you have immigrants, but why are immigrants different than us? Why are they not going to stay back for the next 3 years while prices decline? They need to be able to answer that. They need to be able to answer how Canada can possibly lower interest rates if the Fed goes up based on where inflation is and based on what's happening. They need to be able to answer what's going to happen as peripheral markets where investments have been made collapse, or when the commercial markets start collapsing. Like, people, if they make blanket statements, they have to be able to back it up. And so far, amongst the people who I've heard who are bullish about the economy in the short term, I haven't heard any really good explanations as to why it is that they believe that to be the case, beyond the certainty and platitudes of immigration and basic words that don't have any specific context
Yeah.
other than long-term growth. So, I mean, I am hopeful that anyone who is listening to those type of people perk up their ears to what I'm saying and start asking them the hard questions so that they start justifying those positions and beliefs.
Yeah, no, for sure. One last thing. All the stuff like that's coming up for renewals and like the negative amortization, like they're gonna have trouble at renewal time. How bad is that looking like in 2024, 25?
It's
Are
getting
we gonna,
terrible. It's
yeah.
getting terrible. And plus, and we haven't even combined it with the job losses. Truth is that if the real estate market collapses, that's a single driver of our economy in some respects in Ontario. And if that collapses and people start going out of work as a result, then it becomes a snowball effect where fundamentally people don't have jobs, and those jobs don't support the mortgages that they have at the existing rates, and the new rates become impossible. And it's not looking good. But you should have a mortgage broker on your Christmas list. You should also have a trustee on your Christmas list. That's the new professional that's going to be de rigueur in the next couple of years.
Wow. Yeah. Anything else? Anything you want to kind of give
That's it,
the heads
Vic.
up
I'm going to
on?
wish. That's it. I'm going to wish you the very best, and
Thank
thank you
you.
very much for having me on your show.
Thank you. Thanks, Mark. By the way, anybody watching this, I screwed this up yesterday, so Mark was nice enough to do this all over again. I'm going to blame it on technical difficulties, but so that's the kind of person he is. It's awesome, like very helpful. And so if you need any help, anything at all, I'll leave his info down below. Thanks,
My
Mark.
best, Vic. Take
Thank
care.
you.
Bye bye.
Okay, bye-bye.